presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Looking good, Billy Ray. Feeling good, Lewis. This is Larry Pesavento setting in for our recuperating John Logan, who hopefully will be back as soon as possible. Evidently, it's hard to recuperate when you're basking in the sun of the Philippines. Anyway, we will start out today with the first chart that I posted in here is a chart on sugar. I haven't traded sugar, I think maybe twice in the last 10 years. I just don't follow the softs, cocoa, coffee, sugar, and orange juice very much. Well, very much is the understatement of the year. But this was brought to my attention to the fact that we had this big rally in sugar. And the reason why is because of the deliverable contracts against it. And the reason why I'm bringing this up is we're having a potential for the same possible thing to happen in silver. And if you can see this morning, we've had gold sell off about $10 off its high, which is really nothing. I think gold and silver are both ready to take off, but silver has backed off very, very little. And that could be indicative of something to come. So if it starts to break out to the upside, don't be surprised, because it could do exactly what the sugar did. It relates to the deliverable contracts against the December futures in silver, as I was told, and I got that from I believe Zero Hedge over the weekend to look at it. But they made the relationship of sugar to what's happened possibly in silver, and the way silver acted with being up $1 on Friday, which was a huge amount. Could be something. We had a, wild day. Everything was really wild on. In fact, it was happening right when I was on the air here. I mean, we were making perfect 61% retracements, or in the case of the Dow Jones Industrials, we were making perfect 786 retracements off the lows of September 29th. I mean, these were to the exact tick. The one in the NASDAQ was exactly at 41.12, and the low was 41.12. The Dow Jones low was absolutely spot on within 1 point, and that's at 16,000 or 15,800 and change, whatever it was, and then it rallied, 500 points. It's continued another 100 and some points today. As a matter of fact, we're up into the zone where we are looking at some really interesting patterns completing up around this around these levels today. We're in the lower end of these ranges, so that's the main thing that we're looking at. And then if we here's, in fact, you'll see the one for the Dow Jones here. I'll put up here. This is for the Dow Jones E-mini, of course, and you'll see that it also went down and made a perfect ABCD pattern on the bottom side, and now today it's made an ABCD pattern on the upside. It's made the 1.27 expansion up there at 16,493, and today is the day that we have a Bradley model date. This is October 5th. And what I'd like to do now, because a lot of people don't understand the Bradley, including me most of the time, but I do want to go over the history of it and how I got started, doing all these things, because this is what really got me into the cycle part of this, moving me away from, just normal cycle work into the astrology part. I will put the Bradley model up with the Dow Jones right now here, and you'll be able to take a look at it. And just give me 1 second to get this thing up here, and we'll bring it up here. This is the model, and basically what the model is, let me explain to you. It was in 1986. I just finished working for Commodity Corporation in Princeton, New Jersey, and I was going through a divorce, and when you go through a divorce for that company, they put you on a 6-month paid sabbatical. And so I was going through that, and my colleague, one of my friends from Indiana University, Dr. Ruth Miller, economics professor there, she was the wife of one of my largest customers at Drexel Burnham. I hedged their soybean and corn crops for the two farms that they had. They were very large farms, well over 1,100 acres, which is quite a bit. Actually, it was 1,900 acres. There's 1,100 of it left. But the main thing was that she called me, or she gave my aunt a note at the restaurant where my grandmother started in 1932. She gave a note to my aunt, and it said soybeans are going to close at $5.32 a bushel on I forget the date. It was October or something. I don't know what it was. And anyway, what happened was I put this. I wasn't trading at the time. I was doing legal work for one of the large firms in Los Angeles, Gibson, Dunn and Crutcher. I was an expert witness for them, and I did that for a couple of years while I was not trading and repairing my mental state. But I was also interested in keeping up with the markets. So when it hit that price, I noticed that it was within 1 penny of where she said it was going to be, and she sent me this note 6 weeks ahead of time. So I called her and asked her, I said, what's this all about? And she said, well, she says, I found, these relationships that you use in your Fibonacci sequences and how they relate to some of these markets. She says, it's really amazing. She says, why don't you come down to Indiana and, we'll work on this. And it was almost Thanksgiving, and she was getting ready to go to Florida because they had a home in Florida. She says, why don't you just come down to Florida and spend a week, and we'll see what happens. Well, the week turned into 5 weeks or 6 weeks. I don't remember what it was, but I went down to Sarasota. And the first thing she did was she showed me this little book by Donald Bradley called Stock Market Prediction. And it was written in 1947, and basically what he did is he looked at the aspects of the different planets, the 10 planets, and he gave them weights of 1 through 10, and then he made a siderograph, which is nothing more than a graph of where things should be, and then he plotted that year from 1947. He took the year of 1946 and he plotted it, and he came out with this little $4 book, and it basically showed a beautiful correlation between stock prices and how these planetary aspects would hit. In other words, these aspects are nothing more than days. When we talk about Venus and Uranus, we're talking about aspects that go around the, one planet circles the other 255 days into 365, so it's 0.618 of the year. All of the other planets are related to these same numbers of sacred geometry that we see all the time when we look at hurricanes and storm, in the atmosphere and stuff. It's nothing more than that. And so we would look at these numbers, and so we tried to figure out, say, okay, what's the statistical validity behind this? And luckily, I have my good friend Jim Twentyman, who was very good with the astrological part of it, and he also was very good with the computer part. But what we needed to do is we needed to match the dates of those particular times that we saw with these cycles to the prices on the chart. And the only way we could do that is to go to a price, we went to Neil Michelson at the Astro Computing Services. It's still doing business today. What they do is they do the naval tables for tidal tables for all the major countries in the world. Everybody uses their, well, some have their own too, but they use his because it tells where the ships are and when the ports are going to be low tide or high tide and stuff like that. But that's Astro Computing. They're up in Massachusetts now. New Hampshire. They used to be in San Diego, and Neil was one of my customers at Drexel Burnham, and I was fortunate enough to get him on a nice ride in gold and soybeans, and so he always felt like he owed me a favor. So he said, look, he said, you just tell me what you want, and he said, I'll give you the dates in computer format, so all you have to do is to match them up in DOS. Well, I think, what was it, C+? I don't remember what the programming was. So we took all the dates that we had for Bradley dates, key Bradley dates, and then we took all the dates that we had in the stock market. We had pretty good data from 1885 up through 1986. So we were looking at quite a bit of data to look at. It was well over 90 years, and when you're looking at 12 to 15, it's more than that, about 15, 16 aspects a year, was well over 1,200 examples. So statistically, we were very, very spot on as far as where the numbers come up. And what we found was that you would be expecting there would be a random, distribution, but it wasn't. You would see clusters of these cycles occurring. Highs and lows of the stock market were coming in spot on with a day or two of these Bradley dates. I mean, it was really exciting, and that's what we really got really, really interesting on. So that's the main thing of what we're doing. At that same time, I was friends with Norm Winsky, who I have on my show here, who does AstroTrend, and Norm was doing the same type of work, in a different. He was in Chicago at the time. He now lives down there in Florida, not too far from where Dr. Ruth lived. But they was looking at what was happening now. As far as what Norman's talking about, he's also looking for today. He emailed me last night. He's still on a little sabbatical for himself because of the holidays, and he is saying that should be today or tomorrow, that he's watching for a potential top. And we've got all these numbers are coming together. I mean, as far as, I don't know how, they can go a lot higher, folks. They really can, because the emotionalism of the market. And frankly, what I think will happen is, this is just a guess now. Repeat, this is just a guess. My assumption is the Fed is going to do something this week. And the reason why is we've got these cycles coming, and then we also have Mercury going direct on Friday. So I think it's going to be this week that they're going to raise the rates. How that affects the market, I don't know. All I know is long term, this thing does not look bullish no matter how you cut it. The only way it's going to look bullish is if we take out 2,100 in the S&P, and then I will say, boys and girls, there's something, rotten with this apple, because it just isn't working. The first indication that we're going to be wrong is that the S&P gets above 1980. And we could very easily do that, because we've got to almost 1960 already today. So these are some of the things that we're looking at that could be doing it. But the pattern is there. I mean, you talk about, God's greatest gifts are unanswered prayers. I mean, we've hit the number in the Dow, we've hit the number in the NASDAQ, we've hit the number in the S&P. And, we haven't opened in the New York Stock Exchange Index, but we're most probably, with the gap up, we're going to see that. And every time we've seen a big gap up or the big gap down, like we had Friday, I mean, the market, was up, really strong pre-market, and then this crazy report came out and pushed everything down. And what happened? It took the report, spit it out, and said, I don't care what you're doing, I'm going higher. And that happens all the time, because, these markets don't really care about the numbers. It's the mentality of the traders that make these things go. And once those numbers hold and shorts start to cover, it feeds on itself, and that's exactly what happened. And not only that, but the bonds had hit the perfect 786 retracement at 160.20. I mean, spot on. Okay, we've got to take a little break here. This is Larry Pesavento sitting in for the recovering John Logan.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay. Okay, folks, this is Larry Pesavento setting in for John Logan. Hopefully he'll be back sometime this week. Not easy recovering from major surgery, but he seems to be he's in contact with everybody, so that's good. Now, we were talking about the Bradley stock market model, and the problem with it is that it does flip and invert, much like we think it's doing right now. We were expecting a low to come in during this time. It looks like it's going to be a high, but the dates themselves are very, very good, folks. I've not found very many things better than the Bradley dates themselves, and even then they're only a probability. At best, some of them are in the neighborhood of 85 or 90%, but most of them are in the neighborhoods of around 70%. And that's a pretty big edge when you're looking at patterns and everything that will also try to get you to the promised land. But we have some patterns completing this morning in all the indices. As a matter of fact, we haven't opened, of course, in the New York Stock Exchange Index, but the indices in the other markets have already opened. It was interesting that the DAX could just barely take out the previous day's high, at least so far. That's the German DAX, which is much weaker than ours. It should be up well over 500 or 600 points from where it is right now, for we're keeping pace, with what was happening with the market, with with the S&P, if they were going tick for tick. And they do it quite a bit, but not all the time. So you have to be able to look at it. Now, one of the things I wanted to mention, and I did mention it before, was the fact that the bonds hit the exact 786 on the Christmas bonds Friday at 160.20, coming off that high we made on August the 25th. We sold off well over 2 handles. We're holding our own right now, but the rates are going to come higher. It's just a question of when, and my guess is it'll be this week, just because of the cycles that we have and Mercury doing its thing. Now, the next thing I wanted to share with you is the chart that came from the World Economic Outlook from the McKinsey Global Institute, and it basically shows the global structure of debt, of what's happened in the last 15 years from 2000 to where we are into 2014, and it's not up to date to 2015, but it's still higher, as you can see. And this is where our real problem lies, folks, is the fact that we have so much debt out there that this is what's going to be the drag on the economy. I know rates are low, but there's going to be defaults on some of these debts because they're not going to be able to pay the money back. That's the bottom line. If you go back to what Bernard Baruch said in his book, My Own Story, that don't be concerned on the return on your money, be concerned on the return of your money. And that's one of the things that we really need to follow very, very closely. So we're going to take a little break here, and we'll be right back. This is Larry Pesavento setting in for John Logan. We got the Dow up about 100 points, and silver's coming out pretty good, and gold is back to unchanged.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. Larry Pesavento setting in for John Logan. We certainly miss his market profile information. It's really invaluable for supply distribution and demand distribution. He does a fabulous job. The next chart that I've posted in here is from Steve Moore of Moore Research up in Oregon. He's back very, very close to where that terrible tragedy occurred this past few days. Near the Umpqua Community College. I actually been up at Roseburg, Oregon, more than a half a dozen times over the years because my good friend Dennis Inouye had a cabin there, and we used to go up there and go fishing and riding the rafts and stuff. But been in that beautiful area many times. But anyway, Steve does some of the, well, not some, he does what I think is the best research for seasonals and stuff in the commodity markets that there possibly is. He's employed by some really, really big hedge funds. And this particular chart that he's looking at is a comparison between 1995 and 1998, the cyclical. And this is how these seasonals are formed, because you go back and look at 100 and some seasons in the stock market and you realize that most of the bottoms occur during September and October, and sometimes they don't. And that's where you get the, sell in May and go away, type strategies and stuff like that. So what he's doing here by using commodity quote graphics, which has a really good matching component into it, so you can pull up a year like this particular 3-year segment, and then you can match it with 2011 to 2015 and see what the correlation has been. And you can see, since this July of 2013, the correlation on this is really, really a big, a big correlation. I mean, it's very, very high. I would assume it's somewhere in the neighborhood of 85%, just looking at it. I wouldn't, I wouldn't do it until I calculate it, but that's what I would expect it to be, something like that. So this is what we have to look at, because this could totally, what I'm looking at here might be, just totally wrong. I mean, maybe the high is not in at 2113 in the S&P, and things are going to change and it's going to go up. But this is just another rally that we've had before. We're starting to see this volatility. We'll see what's going on, but we'll have to wait and let the market tell us what we're looking at here. But this is nothing more than, it was not unexpected, for heaven's sakes. On Friday, the market got up, yelled and screamed and beat on a drum and said, I don't want to go down anymore. We had a terrible jobs report, probably the worst one ever, and the market dropped 300 points in the Dow, and it stopped exactly where it should have, as I mentioned earlier on the show. All 5 indices that I follow, which was the S&P, the NASDAQ, the Dow Jones, the DAX, and the New York Stock Exchange Index, all stopped at perfect fib numbers, either 618 or 786, within 0.00%. I mean, it was just spot on. And then when the market starts to rally, the shorts are certainly, scared to death, and then it's a self-fulfilling prophecy on the way up. They just keep covering and covering and covering, and then away you go. And then once you get to unchanged on the day, the bulls are in control. They have no fear now because they had the terrible report, and the market just spit in its face. And so, we only have one way to go, it up, and you just look at the next target, which took us up to pretty much where we are so far this morning. That can't mean we're going to go a lot higher, but that's the way, the market reacted. And not only that, at the exact same time that was happening, while we were on the show at that time, the bonds hit the exact 786 at 160.20. We even brought that out, and Mr. Z in the room for Tiger, in the Tiger Den, was also mentioning that we had hit that number. And it hit it spot on, folks, 160.20, and it broke over 2 handles, and it's still dropping. It's broken 2.5 handles now. So until that turns around, we'll probably, see stocks be rallying more. But we have a key date today and tomorrow. It's a big time, and it can be off a day or two. Wednesday at the very latest. That's the 7th, and then of course on the 9th we have Mercury going into direct motion, which means that the communication on everything should be a lot better, and then we'll see what's happening with some of these things. I've had a question about why I posted that chart of sugar in the room early this morning, and the reason for it was the relationship of what was happening to deliveries in sugar to what's happening to deliveries potentially now in silver, because the CME has alerted folks that the amount of deliverable silver is at record lows, and also in gold. There's just not a lot of silver and gold to be delivered. And if that happens, you can see a short squeeze, and these markets can, but not only that, you can see a short squeeze from a market that's coming from a very oversold condition, and bada bing, bada boom, you can see what happened in the stock market on Friday. You had an oversold condition right after the opening in an up market, and you can see what can happen to these things. So I wouldn't want to be short gold and silver in here. They look a little bit too suspicious of wanting to go to the downside. But you're talking to someone who's a good friend of Clayton Moore. And those of you that don't know who he is, you shouldn't be listening to this program, because he rode a horse named Silver, and his partner was named Tonto. And the name of his horse was Scout. I happen to know all of the horses of all the old cowboys and stuff. That's what I used to do when I was a little boy. I was a big fan of Lash LaRue, and Lash LaRue lives in, or he did up until 1998 when he passed away. He lived in Tucson, Arizona. I was able to meet him when he was in his 90s. He'd been married 13 times, and that's a long story, but he said he loved women, and the person I was with at the time said, I heartily disagree. Anybody married 13 times does not love women, which I felt that was kind of funny. Anyway, we'll see what happens when we move on to the next thing. Okay. We want to talk a little bit about foreign currencies. We're pretty sure that the Canadian dollar has made a really significant top in here because we're down. We made 4 handles from the high as of this morning, which sets up a market that wants to go usually a great deal lower, but we have to give it a little bit of time because we've broken far below the 786 level in the Canadian dollar now after we made that 3 drive to a top 6 days ago up around that 134 level, and now it looks like the next objective will be somewhere around the another 300 handles or 300 points lower on the market here in the Canadian to get it down about the 128.50 level is what it looks like from a longer time frame. The same thing that we have going on in with the euro. We're having some pretty good up and down moves in the euro, which is really good, but it still looks like the euro is heading to go to lower levels. That's what it looks like to me. I believe that we're heading towards par. We need to get through that 110 level to really get us moving to the downside. But that's each time it rallies, it either stops at the 618 or the 786 in the previous highs from the ones we made back on August 24th. So we'll see. I just a person has asked me here in a Skype here about the quality of these dates on the Bradley model, and believe me, they are just probabilities, folks. And not only that, but you see, not just one date that comes up on October the 5th that we're looking at. It's a multiple hits from different sets of cycles, and I'm talking about it could be a 5-month cycle, it could be a 2-year cycle, it could be a 4-year cycle, depending on what they are. But what they do is they come within a day or two of all of them lining up together. Those of you that have been with us here at TFNN for a long time, if you'll remember the formation that we had back on March the 5th of 2009, we had 9 of them all set up at the same time, right on that date of that low of March the 5th. And the market was setting at some major Fibonacci numbers at that point. And, I mentioned, I said, this is it. I said, the wagons have been circled. There's no point. There's no return. It either starts going up from here or will never stop going down. And that was the bottom. And that was nothing more than looking at a whole bunch of these things coming together at the same time. The patterns were coming together, and that's what you're trying to do. And I'm aware that this stuff is far from perfect. I mean, no one has to prove that to me. I've been watching this for so long. I mean, I already know that there's no holy grail in this, but this is the best that I've seen as far as putting things together mathematically and geometrically and not having to worry about the fundamentals, because the fundamentals, that's hockey puck stuff. That's BS. I mean, look, perfect example. Look what happened Friday. You get a jobs number of 112,000. They were looking for 270. It's the worst one we've had since Washington was president. And you'll see that that's what can happen. It's just the market conditions can move things, a great deal more. And you have to remember that many times you're going to be wrong on these things, and that's what your risk management and your stop protection is going to be for. Now, I wanted to show you what I believe is happening in silver and also in gold, because we've already done this this morning. As far as what we're looking for, I believe silver has broken out to the upside, which gives us another $1 higher, at least up to 1640. We get above 1640, we could be looking at 1840 very, very quickly in the silver. In fact, this is one of the fastest moves out of any cycle low we've had in silver over the past few years, $1 an ounce the first day. I'm not sure where it's trading right now because I can't put both things up at the same time, but I wanted to be able to show you the silver. Gold looks pretty much the same as far as the breakout level. It hasn't quite broken out yet, but I know it's getting very close to that level. But silver is certainly leading the pack here. And we'll see if these are going to have a pretty good move. Remember, they're very, very oversold. And the thing is that when we made new lows in platinum, on Friday also that we talked about, and that is also indicative that this could be a pretty significant low in some of these things because platinum has been, lagging quite a bit. And now we'll see if this is going to be a case where they first start to run together. So we've got a lot of things happening. I need to, boy, this is really fast today. I had a lot of things to say. I don't know if they mean anything or not, but that's what okay, 1 second here. I wanted to do the bonds because I think that was a key to me in the bonds. The fact that I just don't have the longer term 786 on here, but you'll see the ABCD patterns that were there. But if you'll check the work yourself on these Treasury bonds, you'll notice that high that we made on Friday at that 160.20 level was exactly 786 to the exact penny from the high that we'd made back on August the 25th. We did pretty much the same thing in the Treasury notes. And if you'll notice the Treasury notes, they also had a very interesting pattern that we've seen many times before, and that is this shooting star candle. And this is one of the favorites of Steve Rhodes, who really categorizes these better than anyone I've seen, including Steve Nissan. But as you can see, when it goes way in the high, closes in the lower part of that range, the lower half of the range, it's usually, a negative thing. And we've already come down another full point in the bond, so we should have some more correction in the notes at the same time too. So we'll see what's going on and what's going on. Could someone give me the last price on silver, please? Because I'm not able to, in order to keep the connection here, I can't put up my platform because it just takes too much, the data flow or whatever it is, and then we have a bad thing. Okay, 52. Did we hit above 1560 yet? Okay, good. If we get above 1560 and close there for more than an hour, I think silver is going to be off to the races. But we'll see. But watch 1560. That's a real key figure, and also the number of 1150. 1148 and 1148 to 1150 in the gold. Either one of those would signal that we could be off to the races. Now, when you get to those numbers, what you want that market to do is boom, accelerate, because if it doesn't, then you got to be really careful, because there's one thing I can't do, folks, and that's buy strength and sell weakness. I gave that up many years ago. Mark Douglas, my good friend, tried to teach me to do that. After about 3 or 4 weeks, he gave up. He said, look, you're good enough doing with what you do. You don't need to sell strength and buy weakness, to sell weakness and buy strength. Just do what you do and you'll be fine. And that's what I do. Every time I try to, to buy strength or sell weakness, I just don't do it. As a matter of fact, when the market was coming down really hard on Friday, I interrupted the show there because I was putting orders in, covering positions, because we were setting at such key levels. All I had to do, was to sell if they broke below those. And so I didn't want to be short at those levels. I wouldn't mind being short below, but not at those levels Friday. Okay, we're going to take a little break here. 877-927-6648. This is Larry Pesavento setting in for John Logan.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, folks. Well, we were able to take out the highs in silver from the previous day, but not in gold. Whether that means anything, I'm not sure, but you would think they would go together, but so far they have not. The key number to watch in the gold is 1148, and in the silver is 1560. Those are the ones that you're looking at. Now we're going to take our attention to crude oil, because that's also in the ballpark here. And as you can see, for the past month, we've been trading between 43.5 and 48.5. So that's been a long-term consolidation, very unusual for a market that's bearish. So my assumption is we're probably going to go down one more time and then turn. So that's just my assumption of what we're looking at. Anytime you see a long-term consolidation like this, it usually means that the market is trying to, put in a substantial bottom. And what it'll do is it'll go down and clean out the stops of the last 3 or 4 weeks and then reverse. And that's, what you'd be wanting to watch. Now, we have a... we're finishing up the show here, and I'm going to repeat a lot of this in my show following this, but we do have a I forgot to bring out the breadth again. Darn it, you talk about the market that still continues to look weak. I mean, this is nothing bullish about the breadth of the market at all. This is really very, very bearish as near as weak. You can see on the far right there the new high to new lows. We've since the 27th we had a pretty good advanced decline, bouncing back a little bit, but you can see the new lows to new highs is still going to the downside. So the breadth is still pretty bad in the market. I want to end the show by saying that this is today or tomorrow. We have this Key Bradley date today. We have a date tomorrow that is from Bill Ehrman, who does some pretty good work. And all of these should tell us, and we're in the window of this particular market with completing ABCD patterns, which will be Gartley patterns, because that's what they'll be doing. You'll be making ABCDs at Fibonacci retracements, but those numbers extend all the way from 1956 in the S&P all the way up to 1980, which would be the high end of that. So you could get all the way to 1980 in the S&P and still be in a bearish mode. In fact, you could make a larger case that if this thing is really bullish, you might even get to 2050, which would be a 786 retracement of the whole move down from 2013 to 1831, and then the 786 retracement back would take you to about 2050, and you could still be doing that and still be bearish. It's just the longer term picture, the way everything sets up. It just sets up for a very bearish scenario. But this would be a really key week no matter what happened. Well, they're all key weeks, but this one's a big one for cycle weeks because of the dates that we have. And we have a new moon coming in on the new moon will be on the 14th, I believe. Yeah, new moon will be on the 14th, and we have Mercury going direct on the 9th. And we have a Bradley date today and tomorrow. And so between today and tomorrow, I would think the market would be topping. Now, the market's going to open sharply higher today. And as you remembered, on Friday, it opened sharply lower in reverse. Maybe it'll do the same thing today. So pay attention to the numbers. That's really the bottom line. And if we get silver and gold moving to the upside really strong, don't be surprised, because it's ready to go. Doesn't mean that it's going, but it does. It is ready to go. You would think that gold would have popped above yesterday's high given what silver did, but it did not. Okay, we'll take a break here. We'll say a few prayers for John Logan to come back, live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.